Great. I see a lot of first-time angel investors who know they're supposed to do diligence, but they don't know quite what that means. They don't even know
Yeah.
to ask for a diligence box or a data room. And so one of the techniques I come up with is I say, well, let me show you where everything is in my diligence box. And you walk them through it. Well, here are my entity filings or my patent filings and so forth. And along the way,
Yeah,
they
yeah,
ask certain questions. And by the time you get to the end of the box, you basically have answered all their open questions and they can't
yeah.
really think of anything else. So we've done our diligence and we're done for the day. And when you're writing a 50K check, that's probably about as much diligence as going to be done anyway. And so oftentimes they just sign up the check. So if they're not going through the diligence, we can help them by walking them through the diligence box just to show them where everything is and what it looks like. Most
Yeah,
early
it's just
stage companies, there's about 10 documents in that diligence box. And so
yep.
it doesn't take long. But and there's
See, that's a great idea because you're using it as another presentation, another way to touch them. It's like, by the way, now we're going to do due diligence. I'm going to show you how to use due diligence on this deal right here, and we're going to go over it together.
That's right. That's right. That's one way we do it. And like I say, with early stage investors who aren't really quite sure what they need to do, that's one way to do it. If they know what they're supposed to do, the opposite is when you talk to a VC fund and they say, okay, we're going to do diligence on it. It takes about 3 weeks and
Yeah.
there's only three deals in front of you. And so you're kind of stuck there because they've got a process, but you're in the queue. It'll happen someday, but it's hard to keep it's hard to keep your schedule going. Oh, by the way, things could change from here to there. And so, that's one of the tougher ones to do. So I always ask the investor, okay, if we're doing diligence, what is your process? And like you say, which analyst is doing this and what information do they need? Do they have a checklist or whatever? And so we're always trying to support that process as best we can. Cool. So
yeah, families are a lot easier to work with because funds have I think, and I don't want to get off tangent here, but I think if you look at the funds today, they've just gotten so big. I think Sequoia announced today that they're splitting into 3. It was either today or last night. So, are they really doing really well for their investors? I don't know. They sort of become like monolithic utilities to me, but that's just,
What's your experience with family offices and doing diligence? I know every family office is different, but if you had to categorize it, is it
they are, yeah, they
intensive? Is it not intensive?
It's intensive. It depends. A lot of them, a family office by definition is a group that has liquid assets over $100 million. The reason is because it costs 1% of that per year just to keep it moving. And what they usually have is that they have a venture capital department. They have a philanthropy department, which I was able to rob that piggy bank, as we talked about earlier. And then they also have like a real estate component too as well. And what they have are usually, members from the family who have, the real ones who are real, who do this the right way. They'll say, you have to go work somewhere else, and then you have to go to business school before you can start working for the family office. And that's really, the proper way to do it. Or what they do is they just outsource, they'll find guys like me or my partners that have, the pedigree track record, hire them to bring inside, to deploy the money that way. So it's not like they're doing it themselves. They have a staff of people who are highly qualified to do it. And they are actually very competitive on salary to do so because it's not about the money to them, although it is, it's about their brand reputation. They don't want that tarnished. They're not going to go into a crypto deal, and embarrass themselves like Kevin O'Leary or, those guys.